So today we're going to tackle a really fascinating puzzle in the tech world. You know, the market is absolutely buzzing about artificial intelligence, but one of the biggest players out there, Amazon, seems to be getting a pretty lukewarm reception. Let's dig in and figure out why.
Okay, let's dive right into this mystery. Because on one hand, you've got this tech giant just pouring billions and billions into AI, making these huge, potentially game-changing moves. And on the other hand, a stock price that just doesn't seem to reflect that same level of excitement. So what's the disconnect here?
And yeah, this is really the heart of the matter. While some AI-focused stocks have just skyrocketed, Amazon shares, well, they've seen pretty modest growth over the past year. I mean, that's just not what you'd expect for a company that's trying to position itself as a dominant force in AI. So what is really going on?
All right, so let's start with the most straightforward explanation for why the market might be hesitating. We'll call it the bear case. And honestly, it really comes down to one thing: money. A lot of money.
You know, this slide breaks down the whole AI gold rush perfectly. On one side, you've got companies like NVIDIA. They're selling the shovels, right? The super expensive AI chips. And they're enjoying some juicy profit margins. And then you've got Amazon. They're on the other side of that deal, buying those shovels in absolutely massive quantities to build out their data centers.
And this is the big risk. Amazon is on the hook for these vast expenditures. We're talking billions to build an AI infrastructure that, while it sounds promising, still has a long-term value that's, well, it's not totally proven yet. You can see why for a lot of investors, that level of spending on what's still a future promise is a huge red flag.
But hold on, that is only half the story. The bull case, the optimistic view, reveals that Amazon has this incredibly powerful and strategic countermove to this whole spending problem. And folks, this is where it gets really interesting.
Okay, so this is the crucial piece of the puzzle. Amazon isn't just a consumer of all these expensive AI chips. Through its in-house chip design subsidiary, a group called Annapurna Labs, it's also a producer. They are literally building their own tech to power their AI ambitions.
I mean, making their own chips in-house? It's a total game changer, and here's why. First, it seriously cuts down their dependency on suppliers like NVIDIA, which gives them way more control over their supply chain and their costs. Second, it's not just about saving money. Their own chip, the Trainium 2, has basically created its own multi-billion-dollar business. And third, having this proprietary tech helps them lock in these super valuable investments in leading AI companies, like their major stake in Anthropic.
And this isn't just some theory, right? This strategy is already paying off, and I mean in a massive way. In its most recent quarter alone, Amazon booked a staggering $9.5 billion pre-tax gain directly from these very investments.
Wow. Now, if this whole making a massive bet on infrastructure thing sounds familiar, well, it should. To really get what Amazon is doing with AI, you have to look at its history. This is a company that has always made these kinds of huge, forward-looking investments.
And you don't have to take my word for it. The company's own CEO has made it crystal clear to investors that AI isn't some side project. It is central to the future of every single part of their business.
And this is their classic playbook, right? Just think about it. They built those revolutionary distribution centers when no one else was. They launched Amazon Prime when people thought it would never work. They even created their own cargo airline, for goodness sake. Each one of those was a massive, expensive bet at the time. Their spending on AI today, it's simply the latest chapter in a long and, let's be honest, an incredibly successful strategy.
So we've got the cautious bear case and we've got the optimistic bull case, which is really rooted in Amazon's history. But how is this tension, this tug of war between risk and reward, playing out in the real world? Well, to see that, we've got to follow the numbers and see what the analysts are saying.
All right, looking ahead, analysts seem pretty positive. They're forecasting a nearly 6% rise in earnings per share and, get this, a more than 12.5% jump in revenue. So that tells us that even with all this massive AI spending, the core business engine is still firing on all cylinders.
Okay, now let's talk valuation, because this is where things get a little tricky. What you're looking at is the forward price-to-earnings ratio. It's basically what investors are willing to pay today for $1 of future earnings. Amazon is trading way up at 29.4, which is substantially higher than the industry average of about 17.5. That premium means the market is already baking in some massive growth. The big question is whether Amazon can grow fast enough to actually justify that high price.
To get an even sharper picture, we can look at something called the PEG ratio. It's a really handy metric because it doesn't just look at the price. It actually factors in the company's expected growth rate to see if that high PE ratio is justified.
And what do we find? Well, Amazon's PEG ratio at 1.45 is still higher than the industry average of 1.16. Basically, a ratio over 1, like Amazon's here, often suggests a stock might be a bit pricey compared to its expected growth. So even when you factor in their ambitious plans, the numbers show investors are definitely paying a premium for that potential.
So, after all that, what's the final verdict from the analysts? It's a Zacks rank of number 3, which basically translates to a hold. And you know what? That rating perfectly captures the entire story we've been talking about. That tension between the huge potential of their AI strategy and the very real, very expensive risks and costs involved.
Which, of course, brings us to the big one, the final, crucial, trillion-dollar question. After weighing the massive costs, the brilliant strategy, the company's history, and all the financial data, where do we actually land on all this?
And this is really what it all boils down to. The market right now is clearly staring at the price tag. It sees the immense cost and the risk of Amazon's AI investment. But the real question is this. By focusing so much on that short-term risk, is it completely missing a reward that, if you just look at Amazon's history, could be absolutely transformative? Now that's the trillion-dollar question for investors to think about.